folks. Welcome to the Ask Weekend Investing Round 56. Uh, let's read the disclaimer, understand it fully, and only then move ahead in the video. Uh, just a reminder that all weekend investors and those who want to follow our channel should use the link in the description and go to the WhatsApp weekend investing channel. All the updates, rebalances, etc., will be coming there. So do make sure that you are there. And for most people who are not aware of how the WhatsApp channel works, it is not going to show in the chats. It's you have to go click on the updates icon. Only then you will be able to access the WhatsApp channel. Do like and share these videos and subscribe to the YouTube channel as well. And let's dive in to the questions. We have done 850 queries so far across 55 rounds. All the previous videos are available if you wish to go through them. And let's start with question 851 from Mr. Hari. Namaste. I know you don't do predictions, but in your opinion, will the simple system of asset allocation, index investing for equities, and regular rebalancing, which has worked for Indians in the past few decades, work in the future also? I would think so. I don't see any reason why it would not work in the future. And the second part is what do you see as disruptions, if any, and what would you advise one to look out for? So I think asset allocation in what type of assets, what kind of assets, how much are you allocating will be key. Um, I'm not a very big believer of just equities investing. So, good asset allocation across real estate, gold, debt is very essential in my view. There have been in the last 100 years many decades where equities didn't do well. Just because we have the last 30 years as our benchmark mostly, we should not think that equities will continue to do well each year, each decade. Um, so, from that perspective, even if equities outperform all other asset classes over a long period of time, we also have to see how much we can sustain those periods. So, if somebody, were to take the example of Japan and the entire generation which came into being, let's say from 1990, 1991 onwards. So, anybody born in 1970, so pretty much my age, uh, and he came to the workforce in 1991, has never seen the index make new highs until now. So that entire generation was scarred for not having seen any gains in equity till till the last decade or so. So we are in the opposite direction where we have seen only gains, and hence we cannot appreciate that there can be a situation of long periods of drawdown also. So you can't rule it out, and hence over allocation to equities is something that one should, at least if you are having a mature portfolio, significant amount of wealth to be protected also. So growth versus protection is something that this dynamic has to come into play. For some people it comes into play by middle age, for some people it comes into play at their latest age. So that is a personal thing, but I would think that we are living in a very, very disruptive world. Nothing of this sort has been seen since World War II. So you have to keep your assets distributed. Ankit says, are satellite strategies meant to boost returns or just to keep investors busy and excited? So satellite strategies are more focused strategies. They are supposed to focus on the element of that particular nature. So whether it is a focusing on a small cap uh, segment, or it is following a particular, let's say, an all-time high kind of a focus. But I mean, again, it depends on the market situation. Sometimes they will work, sometimes they may not work better than the regular strategies. So that's all I would say, but they are not intended just for excitement. Srikanth says why NNF10 is not having gold weightage. So uh, most of our strategies don't have gold weightage, and that is because by design they were not supposed to have any gold weightage. They were purely equity orientation, and it was expected that your wealth manager, your financial advisor, or you yourself would take care of asset allocation. After we rolled out several strategies, we got a lot of feedback saying that we should have gold weightage asset allocation in the strategy itself, and then we rolled out MI Evergreen and all cap gold, etc. So all strategies don't have gold because of legacy reasons, but yeah, I mean, if you have to allocate, you can always allocate from outside and mimic a gold based strategy. Dikshit has the next one. Over the last 15 years, markets haven't shown those wild bull or bear phases we saw in earlier decades. I think we saw a wild bull in the last 5 years. It's almost like the market is now built to quietly deliver a steady 12 to 13% CAGR. This thought process that market will do this in the next 5 years never plays out. So everybody's talking about that next 5 years market will not give any returns, not no great returns. I'm not so sure. Nobody can really call that. What do you make of this? Is this something brewing between beneath the surface? The new stability is the norm. You never know. I mean, it'll just take one bad year for the entire world to start printing like maniacs again, and you will see markets go up like crazy. So it is a everything is a function of the base money. If the base money starts to flood the system, your 80 PE stocks will go to 150 PE stocks. Neither were they justified at 80 PE, neither they will be justified at 150 PE. But because there is so much money in the system, just like what we are seeing right now, domestic liquidity is flowing regardless of where the market is. So if that becomes a global deluge, then this percentage business goes out of the business. Everything is in relation to inflation. If inflation is 6%, we are saying okay, 12% is good market return. If inflation becomes 12%, market returns will have to be 20% at that point. So I am not going to predict anything for the next, so many years, because nobody really can. I certainly can't. So stay invested, stay with your strategy of asset allocation, equity allocation, and don't worry about CAGR. If you are properly allocated, you will get good CAGR versus inflation, and that is the whole aim, that you should be ahead of the inflation. Beating a certain percentage number is not the aim, as far as I understand the game. Ranjan says, can I access your strategies and weekly, monthly shuffle via small case and directly execute if my broker is not registered with small case? It is a, I mean, I'm sure people are doing it, and it is, and it's it's an inconvenient way of managing a small case. The whole idea of the small case is that you do one click and you're sorted. You get proper uh, performance dynamics, your metrics, everything is there, with a single click, and you can open an account in 6 hours today. If your broker is not registered, doesn't matter, just go ahead and open a account with a discount broker. The next day you will have your account ready. So unless you want to, not execute on small case, that is a different matter, but this is not recommendable, because unless you will, uh, I mean, you will have to do a lot of manual calculations, and that certainly is not advisable. If you want to inflict that pain on yourself, I mean, I can't stop you, but that's not the whole point. Ram Kumar says, when a stock keeps going up with no logic, is that irrational, or is it the purest form of market truth? It is the truth of the market. Price is God, bhav bhagwan che. We assign logic to it when we understand some logic around it, but the price always moves in its purest form. So stock starts to move, people look around, why is this moving, let me assign this narrative to it. So most of the time you will find that, like, let's take an example. Eternal is where it is, right? 320 rupees or whatever people are saying. I don't know how many hundreds of price earnings ratio is there, so on and so forth. Nobody's able to understand why the stock is there at that point. Some valuation guru is saying it should be 40 rupees only. Whatever. Nobody's really able to understand that. But if you go check a lot of FIIs, mutual fund portfolios, it is there everywhere. Either everybody's playing momentum, or they are trying to convince themselves that no, I don't play momentum, but this is going to be the big story 10 years down the road. I don't know. So in Hindi they say sab bhav ke khiladi hain. So the price is the real truth, Everything else is a wrapper around it. So I would believe that just go with the price, and that's the real truth. Murthy says, can you demonstrate with the help of data how gold debt in the portfolio reduces the risk and smoothens the returns graph? Take different examples for 50%, 70%. We've done several such studies. Uh, I'm sure if you just do a very quick search on our YouTube video, you'll find several of these studies where we've taken different, perhaps not debt, but again, it will be the same thing. If different percentages of gold versus different indices, and it's it really helps to smoothen the returns graph. It really helps you to keep yourself invested. See, we need to take one step back and realize why markets go like this when they do. Because people panic and they throw away their position and their portfolios. That's why the market does this. So, if the returns graph was reasonably smooth, nobody would be in that pressure to sell. And that's sort of the wealth transfer that is happening for those who are unable to stick to a strategy or unable to stick to their investments, are transferring their wealth to others who are taking advantage of that. It takes a while to understand the importance of asset allocation after you've been hit blue and black couple of times. Um, it took me also a lot of time, perhaps a couple of decades, but there's nothing wrong in that. Whenever you find out that you should do it and you are more happier doing it, you should do it. See, there is no race. You are running your life, you are investing. From time to time, you have to uh, reevaluate your strategy. What am I doing right? What am I doing wrong? What is giving me happiness? What is giving me sleepless nights? And you have to do course correction along the way. Don't look at anybody else what they are doing. Doesn't matter. So as long as you are happy with your investing, as long as you are having a comfortable sleep, you are beating inflation, perhaps even beating benchmarks, all is good. Nita says some people say never fall in love with the stock. Yet people have created wealth by hanging on to stocks for decades, if not half a century even. What is the right thing to do? So there is no doubt that there is enormous amount of money to be made if you latch on to a winner. The only problem is nobody knows which stock is going to win in the future. So all the examples that we see, that we bought Bajaj Auto in 1985 and we bought Hindustan Levers in 1992, and Eicher Motors in 2003, and uh, Eternal at 40 rupees 3 years back. It is all hindsight and survivorship uh, bias. There's a huge survivorship bias in all these stories. Out of 6,000 stocks, if there are 200 such stories or 500 such stories, it is still you are selecting those 500 versus the 5,500 that went to zero or did not give money to the investor. So there is a huge selection bias that is associated with when somebody says I bought MRF 30 years back. Well, somebody could have bought, perhaps Unitech, Yes Bank, Eben Lloyd. So many stocks which have gone from virtually market peaks to virtually near zero. So, and beyond this, if you are a person who is willing to take those shocks, let's say you somehow gotten into three stocks which really do well, but they give you a 60-70% kind of a move every other year, up down, and you don't have the heart to see your capital go up so much and come down so much, then there is a problem. So it is very individual how much pain you want to take in making your gain. I mean, Amazon, Apple, they all dropped 80%, 90% at times. Uh, can you handle that? It is very easy to see in the chart and say, okay, in 2002, if I had $1 million and it was down to 120,000, I would have survived and it would have gone to 10 million now. It's easy to see in the chart. When you actually live through it, would you survive it or not? Just not so far back, just go to COVID. Why were people throwing away their stock in March 2020? because people thought that for the next decade there is not going to be any business. But 3 months later, everything had changed. So it's very, very difficult when you actually do these decisions in real time, and hence some framework of how you're going to invest, what will cause you to exit, what will cause you to stick on has to be there. This hearsay and I will see when it happens, it never works unless you sort of buy and forget. Usually it happens with those people who will buy and forget, and that amount that they've bought and forgotten is not so meaningful for them. If you have 100 rupees wealth and you put 5 rupees into a stock and forgotten about it, that is anyways not going to create humongous wealth for you. So all these are, sort of more behavioral, emotional kind of decision making things, where you may take a decision that, okay, I'm not running after any particular stock, I will follow a particular strategy. Even if I get 15-20% CGR over a long period of time, that's good enough for me. At least I will not have any sleepless nights, or you know uh, situations where I don't know what I should do, whether I should sell, buy more, so on and so forth. Manoj says, if a strategy never shows good performance, say during COVID correction, is it correct to assume that it will perform similarly in future corrections also? Not necessarily. Each strategy will have different combination of stocks at different time. It can behave very differently. Uh, you really can't say that if something had a less drawdown in one fall, then in the next fall also it will have half the drawdown. That probably is a bit of a stretch. But the whole idea is that um, theoretically it should behave somewhat similarly. What the numbers will be is very difficult to say. Conceptually, I mean, like conceptually, if you're saying that I'm going to get out of my stocks if, with certain parameters get met, then of course that will happen. But what will be the steepness of the fall on a single day, in a single week, in a single stock? That all those things will determine how the overall outcome is, and that may or may not be the same all the time. Praveen says, can I manually do rebalance by buying stocks directly in Zerodha platform? Yes, you can do that, and you can report it to small case backend, and they will update your portfolio. It does create a lot of work at your end, but if you have some compliance issues, you can certainly do that. So we are at the end of the Ask Weekend Investing round. Thank you so much for your comments. I am sorry if I'm not able to take your comment today. If it's a burning question, do send us an email. We'll try to answer that. All the previous episodes are here in the description in case you wish to go through them. And please do like and share these videos if you like the content, and do subscribe to the channel. I'll see you next week. Bye.